Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel. And for those of you who are new, welcome to the Daily Gold YouTube channel. If you have a moment, do me a favor, click that subscribe button. We got a lot of great content coming for you this year. Would love to have you be a subscriber to the channel. This video is being recorded on the evening of Wednesday, February 5th, 2025. And in this video, I'm going to talk about potential, I shouldn't say potential, well, they are potential, but gold and silver, potential price projections over the next year or two based on a historical model. Now, that sounds really fancy, but it's based on my analog charts. And so I updated these in the last few days, wanted to show you what those charts are showing us now. So let's get right to it. Now, the first thing, I'm going to talk about gold against the 60-40 portfolio, which is right here. And again, that's gold against 60% stocks, 40% bonds. In here, I'm going to talk about, I'm showing, I should say, gold against the S&P 500. So gold against the stock market, this is 60% of this. Now, we know that gold against the 60-40, I mean, this is trying to break out. This is really close to breaking out. Now, this can break out and probably move up a little bit just because gold is crushing bonds right now, and bonds are really weak. But if we're going to see this make this kind of a move, like this, or even this, which we had right here, we're going to need to see this break out and move up like that. So in other words, we need to see gold outperform the stock market so that this baby really explodes and accelerates. Because otherwise you get kind of a breakout and then a muted move, and then it kind of falls back at some point. And so based on these projections that we're going to go into, for these projections, especially on the bullish side, for them to really come to pass and be realistic, that entails this breaking out. So that entails gold breaking out here against the stock market. So I just wanted to point that out first before we get to the charts. So here's the first one. This is the gold all-time high breakout analog. So this plots the 3 points and the current one when gold broke out to a new all-time high and sustained it. Now, it also did this in 2007, but it did not sustain it. So I removed that analog from this equation. So we're focused on the 4, and this is on this looks at these past breakouts, 72, 78, 2009, two new all-time highs that were sustained, and it looks at them, it plots them on the scale of the current breakout. So the current breakout move began, I think, at the very end of February. And then gold, I believe specifically, I think it was the first week or so there, last March 2024, when it broke to a new all-time high. So everything is on that scale, and we can see how all these breakouts perform compared to the current breakout. And what I love about this chart is we also threw in 2 averages here. So this line here is an average of the 3. And then, of course, this one already peaked. So over here, this is an average of the 2 weaker of the 3. And again, this is an average of all 3. So this is an average of the 2 weaker ones. And you can see where we are right now. This is gold. It's right around the 2 averages. So what's interesting is we start to see an acceleration here. Is that in March or April? You start to see the averages really accelerate. And even right around here, I mean, we're looking at, based on these averages, that's $4,000 an ounce in the summer, this summer basically. So that's like potentially in 6 months. So I think that's excessive. I mean, that would be another 33, 35% move in gold in the next 6 months or so. So I don't think that's going to happen. But nevertheless, like let's look at the weakest of the 3. This is a 2009 breakout. And so this along with the average of the 2 week, call this about 4,000 right about here. So that's in 11 months. Like let's just call it 12 months or so. So conservatively, in 12 months or so, these 2 lines would put us around 4,000. Another thing to point out, based on my study of similar cup and handle patterns, they all went from the measured upside target to the log target in 6 to 12 months. Now, the measured upside, that's simple math. You're looking at the depth of the cup, and then you're applying it to the top. The log target is you're looking at the percent depth and applying it to the top. So again, historically, these various cup and handle patterns, they move from the measured upside target to the log target in 6 to 12 months. So what does that mean for gold? That means gold, the measured upside target is 3,000. The log target is 4,000. So that means when gold hits 3,000, we can project based on history that $4,000 target could be in 6 to 12 months. So I'm including that in the equation as well. Now, next chart for gold. This is a simple bull analog. This just looks at the 4 strongest cyclical moves in gold. So we have the 2 in the 70s and then 2 in the 2000s. And I measure these a little bit differently. I don't necessarily start them from a perfect low. I kind of look for the point when a real impulsive move has began, when the move has started and then continues to trend higher, aggressively or consistently. So again, these are the 4 strongest cyclical moves in gold historically. And then we have the current one, and so I began the current one, I believe, in October 2023. Current one here is in black. This is all weekly data, by the way. And we have an average of the 4. And what's interesting is if you take the 2 weaker of these 4, and those are obviously in the 2000s because the 2 in the 70s are just off the chart. So these 2 in the 2000s, they peak at 4,800, 4,600. The average peaks here, thinking about 5,000 or 5,100. So if we're looking at the timing, that comes down to, was that August or September of 2026? So that's like 19 or 20 months or so looking at the upper 4,000s or 5,000 gold. So that would be quite the move in gold. Again, based on this history. And here we can see gold has basically been hugging the average the entire time. Now it's a little bit stronger. Well, let's look at the average. So the average really accelerates, we can say, about 5 months from now. So what if, I'm not saying I think this is going to happen, what if gold goes up a little more, gets to 3,000, peaks for 5 or 6 months, corrects some, and then it comes back up, and then it's sitting here, and what if it were to follow the average? That would still be a hell of a move. So even if gold were to pull back for 3 or 4 or 5 months, even 6 months without making a high, can still be in position to follow this graph. So based on the average, it looks to me like right here, this is where things really should accelerate. So that is basically this summer. What was that, July or so? So that's gold. So let's look at silver. Now, silver, this is, I should say, a little surprising, but when gold makes these strong impulsive moves, silver's time making its moves are shorter because it makes more accelerated moves. So this kind of scares me a little bit. So this is silver's performance after gold breaks to a new all-time high. I threw in 2007. You can see that here. So we have, here's the average, the dotted line. And so silver so far, yeah, it's kind of been closely following the average. But if it continues to follow the average, this is nuts. Even if silver follows the weakest one, this line right here, I think this is about $51 silver right here. 51, that would be in, we're probably looking at September. So what is that? About 19 months or so? $50 silver. So that's not that extreme. So yeah, silver could follow these ones that are not as extreme and still have an excellent move. So one more chart for silver. This is the silver bull analog. And again, we can see here how, like I said, you get a real impulsive accelerated move in gold. You get the same for silver, but it's even faster. And so therefore it doesn't last as long because okay. So I had to cut this off so we can see here more visually. But what I think is interesting is how this is $50 right here. And so look at how the average really accelerates on the current scale, the average of all these past moves. It really accelerates at $50. Look, you have a steady move here, and then it goes from 50 to 80. And what is that? Is that 3? It's about, yeah, it's about 4 months or so. It really accelerates. And by the way, I see that happening with silver. Whenever silver breaks 50, it's going to run to 90 or $100 in a year. Like, it's going to be really explosive when it breaks 50. Now, back to where we are here in the short term, silver is kind of underperforming here. It started out, it was kind of hugging the average, a little below it. So it's been below the average for the last 6-7 months or so. So here it is. And even if it were just to follow the average, it could get to $40 in late June. And again, if it were to follow the average, maybe it could get to a peak of, what is that, 44 or 45 by the end of the year. These are just some things to think about. So last thing, again, we have to think about what I was talking about here and how important these charts are for, well, this should say gold against the 60/40. I guess that fell off somewhere. So yeah, just concluding by saying these charts are so important for gold and silver reaching those targets, and especially this one. Gold needs to outperform the stock market. Because if this thing just hangs here for another year or so, you're not going to see pressure. You're not going to see silver in the 40s. You're not going to see gold at 4,000. We need to see this outperform for gold and silver to hit those wonderful targets. That's all for this video. Hope you got a lot out of it. Let me know what you think. What are your opinion on these charts and what I talked about in this video? Would love to hear from you. Thank you so much for tuning in, and I hope you have a great rest of your week. I'll talk to you guys on Friday.